Hey everyone, welcome back to another video. This first trade will be on the long side of the market. Now, as you can see from this 5-minute chart, the price keeps declining and breaking below each bottom of these successive sideways channels before actually dipping below the yellow dotted horizontal line here, which represents an order block. This break also generates an algo-driven stop hunt right over here, which, as we know, is a price action movement often seen near downtrend lows. At the same time, we also have the previous day's low here printed right below the 38.53 level. Okay, so from our stop hunt zone here, price starts to establish an upward trend but gets rejected after reaching our order blocks level, which is now acting as resistance. That said though, all of this price action following the 39.62 rejection and the balancing of this imbalance area right over here, which I should note, by the way, bias-wise is directionally important. Now, all of this price action appears to be, in my view, entirely consolidative in nature. In fact, after these higher lows here, the price continues to push higher as the buy side gains momentum in its attempt at breaking above the 39.62 barrier. Now, for you guys who are new to day trading, when you're looking at a chart, I'm sure that it's easy to get caught up in all of the different lines and indicators, and sometimes it gets confusing. But do not get discouraged, because once you gain some experience, if you take a step back and look at the bigger picture, you will start to see patterns emerge. And one such pattern, after this 50-point decline in our chart here, one such pattern was, as I already mentioned, the formation of this stop hunt area, which signaled to us that the range's direction was close to being reversed. This liquidity grab was then followed by a stair-stepping pattern and a consolidation period. And again here, if you notice, we have this directional higher low that prints into this imbalance zone. Now, I use the words important and directional when referring to this particular move because through this price action, algos indicated to us their intended price direction by going 50% or so into the imbalance zone rather than fully closing it. And as you can see, this was followed by these successive higher lows, further reinforcing my long bias on the trade. What I'm trying to say, guys, is that the market gave us some very clear signals that all we had to do is just pay attention to them. And that's exactly what I did in this case with this trade, which technically speaking wasn't that difficult to identify.
Target filled. Target filled.
Okay, now that this trade is done, let's move on to the next one. We are looking at a 1-minute chart for another long trade here. Now, what prompted me to enter this trade is that after this distribution phase, the market repriced some 25 points lower as it printed below the short-term low here along the 38.77 level. After that, the market trend reverses before going sideways. Now, obviously, we won't look for spikes in either direction. Here, since consolidations are usually just a range of prices with no set structure. What we'll do instead, though, is try to trade between levels of supply and demand. Now, as we move to this part of the chart, we come upon a price action area which appears to be rather directional, in my opinion. The reason I make this point is because we have the market here break not only below the lower levels of its trading range, but also into this imbalance region. From a price trend perspective, I
Orders
believe
submitted.
this is an important technical signal, given that after the market makers went for liquidity below 38.75, there was a strong bounce off of the 38.70 level, as showcased by this bullish bar, prompting the closing of these two imbalance zones right over here. Another element that further reinforced my long bias on this trade was
Order
this
filled.
decline, and more importantly, the fake breaking of the mid 38.76 support level. And the reason for calling this a fake breakout is because this was just a bear trap, an often employed technique by market makers to deceive us retail traders into believing that the market is about to puke lower when in fact this marks the end of the down move. So based on these factors, I went long. That said, however, I think it's worth mentioning that I got very close to getting stopped out, as you can see. So execution-wise, I would certainly say that I got lucky on this
Target
trade.
filled.
Alright guys, so that should do it. Thanks for watching, and if you like the video, please like and subscribe. Thanks again,
Target
and hope
filled.
to see you in the next one.